All right, guys, what is going on? What is Gucci gang? Are you guys ready to learn something today? Are you ready? Are you ready to learn something today, chat? I don't know, man. Maybe you're ready, maybe you're not. I don't know. So, I'll begin with last night's tweet. So, I actually stayed up and was watching Asia, and I was watching all the way until like after midnight. And I'm falling asleep, you know, watching price, and right before I went to bed, I was like, oh, buy side looks juicy. I tweeted it, right? Went right to sleep. And thank God I didn't enter any trades, because I woke up, you know, this morning, and overnight, complete, like, London just dominates lower. So I woke up and we were down like 100 points. I'm like, oh shit. It's like, this is why I never trade before going to bed, dude. So just to follow up on that. Okay, so because that was up in here. That was like right in here. It's like right around midnight, right there. And we absolutely shit the bed lower. So when I was looking at this last night, I just did not think, at least overnight, right, coming off of a holiday, I did not think we would do that. I thought we were going to leave that open. So it's like, okay, because we had that large overnight movement, and this is why I said those things in a Discord earlier, how that you should be careful this morning, because we're coming off of a holiday and equities is going to give us a very large opening range, right? Because Friday's closes here, and then our Tuesday open is like 74, almost 80 points down, right? So, and obviously you can see it on the chart still already in both regular trading hours as well as electronic. Okay, at least on the hourly, it looks like a pretty decent sell model. So, but again, the issue with that, and I said this earlier, when we do price grading, right, we have our 25% and higher premium end of the premium. We have 50% and higher, which is premium. And then we have 75%, or if you reversed it, if 25 was down here and 75 was up, it wouldn't have mattered, because they're just quadrants, they're just quarter levels. Okay, 50 to this quarter level, like that's the premium end of the discount, and then here is our discount end. So when we get to the discount end of a discount in a sell model, that to me is fairly late. Okay, it's very difficult to frame trades in here if you do not first like wait for manipulation. You get me? Like what I mean is, and again, like keep those in mind, right? Our 0.5 up here and our 0.75 here. So at 7 a.m., for whatever reason, 7 a.m. has no wick on it, right? We trade lower and then equities is here. So equities puts us right into the discount end of the discount. Now, normally, in normal conditions, if we had some highs, we just took out a low and we're at the discount end of the discount, that would be great for longs. This is not good for longs because we have sell side liquidity down here. So in a small amount of time, right, the market may trade higher, right? It may seek a premium or at least the premium end of the discount, right? Like give us something here. So we do end up getting that 7 a.m. No wick, right? Or no shirt candle, if you want to call it that. We get into that. Immediately lower. New low of day. We do get a retracement. And I think the timing on this is a little bit awkward, honestly. I mean, that's just my opinion here. That's all I ever give you is my opinion. I'd like to see if this is going to be a mitigation, even though the higher high is like right here and not so much like taking out these highs up here. And I think, I don't know if it was, I forget, there's so many Discord members. I forget who's who, but one of you pointed out the highs up here and the highs up here. And I said, I would want that to be left open. Right. And I don't know, again, I don't know if that was for ES or Nasdaq, but you notice how we didn't get up there? At least as of right now. We might just say, you know, fuck this mitigation and go higher. We could, but we did not do that initially. Why do you think that is? Well, John, you know, you got all this experience and you're a genius. I might have experience, but I'm no genius, baby. All right, I'm no fucking genius. It's just, you're in, again, like I said, you're in from 50 down to like 75. Like this, I know it's a wide area, okay? But that's like the premium end of the discount, right? So we could look for shorts up here, and yeah, there's going to be liquidity up there, but this is like a 5 minute, 1 minute sort of time frame during London expansion lower. We would need to see expansion higher, like we would need to see a reversal, right? And that doesn't make sense to me. Why would we get a reversal here when we're only like another 25, 30 points to the sell side? That doesn't make sense to me. Okay, like half the shit I see on social media, it just doesn't make sense to me, right? On top of that, if we go back to regular trading hours, we were on electronic, now we'll go to regular, right? When you do what we just did here, price grading, okay? Price grading is not just for ranges. It's not just for, like, let's say you can price grade a market maker model, right? That's what I do. That's how I use my fibs. Okay, I don't use 618, 786, nothing like that. Okay, you can price grade concepts as well. Now, I've told you this before. I usually don't do it because it ends up for a lot of people being information overload. And so to avoid that, what I kept it at was just, hey, look, every concept can be inverted and every concept has its own premium and discount. Okay. Now, the reality is every concept has the quarter levels, basically. So what does that mean? So, and again, you don't like have to use this because I generally don't. But let me just give you a quick example. So right now, this is a potential mitigation. And I said potential because I'm not sure. Okay, I do think we're going to go lower. But if I'm wrong, we might end up trading higher. And that's fine. But just to give you an example, price grading like we just did, you can do that with concepts as well. So that means this mitigation on a 5-minute with those two down candles to asset potential, okay? We have the lower half and then we have the upper half, right? And we have 25, 50, 75. And you can see why a trader would get analysis paralysis, right? That's a lot of fucking information. Which is why I've always I let you know, but I've always said, like, look, if you just want to simplify it, just cut it in half and don't, do all the quarter levels, and just understand if we are going to be bearish, we should leave that upper half open, to an extent. Can price trade halfway? Yes. Should it trade all the way to the high end if we're bearish? It can, but in most instances, it should not. Okay? All right, John, well, this is cool, but I'm still kind of lost. That's okay. I know. I had to learn all this stuff too. So trust me, I know where you're at. Well, I know where some of you are at. And some of you just don't really give a fuck. And that's fine too. But anyway, moving on. Now that you understand that, okay, you understand price grading is what that's called. It's not something I created. I didn't invent that. Okay? When we look at our opening range, okay, we can grade the same shit. We're going to take this off because that's from a different measurement. We'll leave the 7 a.m. no wick on there. That's fine. That's cool. But now that we have these levels on here, right? When we go back to electronic, where do those like consolidations slash like highs, liquidity buildup, if you will, where do those occur? I don't know if you pointed that one out or not. I'm just kind of guessing here. But these up here, right? Where are they at in the range based on the regular trading hours? Well, one of them is below 50%. That might be likely. But this one up here is above 50%. So in a potential market that is on a higher time frame bearish, to me, again, I could be wrong. This thing could fly fucking higher. Okay. But based on what we've been looking at, based on what I think is going to take place, if we are going to trade lower, then the regular trading hours gap, right, upper half should be left open. Should be. Doesn't have to be. I always have margin for error. I can always be wrong. Okay? I'm not always, to the tick. Okay? As much as I would want to be, I'm not. Those levels up here, they're too high in the range for me to trust. Not until we trade lower to the extent of that sell side liquidity. Okay? Does that make sense, everybody? So that's why I said that earlier. Now, I know that's a lot of information to get to. Well, we had to look at electronic, then we had to look at regular trading hours, then we had to do price grading, then we got to do, all this shit. It's just analysis, bro. That's all it is. Horizontal lines and boxes. That's all it is. And if you didn't do anything over the weekend, well, whose fault is that? Right? Whose fault is that? You're supposed to look at your higher time frames on the weekend. So now again, I saw that. I just didn't think we'd get down there. And I sure as shit didn't think we'd do it overnight after a holiday. I just didn't think we'd do it. So I didn't have that expectation today. I woke up thinking we might be higher or consolidated. I woke up, checked my phone, and we're fucking lower. And I go, oh, well, I guess that tweet's wrong, right? I told you I'd throw you a loss. Or I would be wrong eventually, right? You're welcome. I told you that was coming. So, but anyway, I didn't do my intro yet, and now I feel awkward, so let's do that. What's good? Pop, Naruto, Scott, Roger, Felix, Monkey, Eric, 2020, Harmon, Willow, Adam, Marshall, Patch, W. What's good? Z, Eminem, Adewale, Jorks, Joe, Mason, Eberneth, Shay, Danny, 49er, Gessner, Stephanie. So good morning and hello to all of you as well. At a regular trading hours chart open this morning, and when equities open hit, I was like, why isn't price moving? Yeah. So, and that's pretty much where we're at today, right? So let's go back for a second. Regular trading hours. We do have this gap down from Thursday to Friday, so that currently would be the breakaway. First leg, I guess, I mean, Friday, yesterday's and previous day, that, I guess, would have been the low risk short, and then our overnight, was our first leg, and then, so today just seems like the second leg to go lower. But we're so at the low end of the range. This could still come back and, let's say, yoink anybody who's short. Right? Someone might be short from up here. Price may want to trade back up, take the buy stops, trade further into that gap, maybe. I mean, that is a possibility. So, we're just in an awkward spot. I favor shorts, but I am aware that there's a possibility that we could also go higher. So if we do go higher, I'm not going to say I told you so, because it's 50-50 for me. But if I had to pick a direction, I would want a short. What should we be studying on the higher time frames? I watched the Phases of Price series. Very nice. Studied that. Just wanted to know what you look for. Thank you. So there's a lot. Okay, if you're talking about weekly and daily time frames, you could look at seasonality. You could you could look at like a quarterly perspective, right? So you could break the year down into quarters. You'd probably use the front contract though, like ES1, so that way you can look all the way back to the earlier contract months instead of the one we're in now. You could break the year down into quarters. You could break the quarters down, or just all of the months from this year, you could break down individually. January, February, March, so on and so forth. I would pay attention to stuff like the monthly open and weekly opens. Did I say seasonality already? I would probably take a brief look at, I wouldn't spend too much time on that. And then I would just look for the same stuff. Levels of liquidity. Now, since you're on the higher time frames, and I would say pay attention to the opening prices, because you could, study, like, say this was a daily time frame, okay? You could study, like, oh, that Wednesday traded into an imbalance, and then, Thursday saw expansion. So did Thursday have buying below the open type conditions, right? And did Wednesday's high or Tuesday's high have, something to target? And so you could kind of get that not surface level understanding, but like that deeper analysis, right? Doing that top down in a way. But you could study the same stuff, expansion, contraction, reversals, shit like that, if that makes sense. So, yep, that is where we are at, my friends. Let's go over to Nasdaq for a second. Nasdaq, similar story, but the only difference is, well, number one, we have like we have very close together lows on Nasdaq today, so that's its own thing here. But the lows that were on ES, right? That's from Wednesday the 20th. So Wednesday the 20th for NQ, that was sell side. And let me just go to a smaller time frame here. We opened lower, drastically lower, and then we tapped into that, rallied. Now we have these highs here. We were traced all the way down, and I'm a little bit surprised that we just did not take that or go further below that sell side and just traded back in the range. So this to me is just another buildup of liquidity here. You see what I mean? Like, those lows are so clean. They're almost identical. And the low on the right is slightly higher. Again, awkward here to me. It's just awkward. ES has lows, NQ has lows too. So, unless you're swinging short from last week, it's hard today to get a good position to hold. Today has not been a hold type of day. It's been a look, if you're in and there's like, I guess, some highs over here and some highs up here, like if you don't partial that or move your stop to like lock in, it comes all the way back on you. You know what I mean? Like that's kind of how the day is today. So if I was in control of price, which I'm not, but if I was, I think I would do what I said earlier. I would run it higher. Anyone who has been short, get them out and then slam that shit lower, especially for NQ. Get people thinking this is a demand zone. Possibly run it higher and then fucking rip it lower. But I don't pull the strings. But if I did, that's what I'd do. Harmon said, if there's liquidity that has been traded during electronic hours but is still open in regular trading hours, would you still consider that as a target? Yes. I did go over that a little bit like last week or the week prior. I said we cut through all this electronic trading to go back to regular. So it can be a target still, even though that price level has been traded through in the electronic side, because it has not been traded through in the regular session side. I forget which stream that is, but it's one of them. I think it was last week. I don't know. Y'all don't take notes on shit, so we don't know where shit is at. I don't write it down either, so I don't know where shit is at. You know what I mean? So that's on us, chat, for not knowing where stuff is at. Pat said it was Tuesday. Well, yeah, rewatch Tuesday's stream. And maybe it's in there somewhere. The candle at 10:11 a.m. on ES or NQ is a time price context entry because of the concept, because of the concepts and the macro. I don't know if you're talking about my 10 or yours, but yeah, I'm not sure. Are you talking about this? That imbalance? Or I can't tell what you're looking at here. Or that up candle? I don't know. I don't know what you're... Oh, on the 1 minute. On the 1 minute. Ooh. The old 1 minute time frame. You said 10, 11. Here? You're talking about this? Right there? Well, I mean, this is hindsight, obviously. I think the best thing that you got going for that is the up candles, right? That overlap with that. Is that what you're talking about? Okay. Yeah, that's hard because if this was me, new low of day and equities open, by the way. Equities open low. Right? Something like that is really nice. But I can tell you for a fact, if it was me, I would have swung for down here. And right now, that would have missed. So that would have been a great partial. And that's why I asked one of you earlier, like, why didn't you think it was going to go lower than this? Because it's not going to run equities like 1 or 2 ticks. It's going to trade, you know, below that to the extent at least 1 or 2 points. Now, it's been a fairly large range day. So partial, in my eyes, would have been a lot better at like 80, 63.80. It's the next 0, 20, 50, or 80 level right below equities open low, instead of getting out right at, you know, 63.83 and a quarter or above that. Like, that doesn't make sense to me. That's why I asked. But 63.80, that makes a lot more sense. I would have partial, held for down here, and then I probably would have got out like on this, or maybe up here. It's hard to say because I didn't take that, but I feel like that's what would have happened. I would have partialed, and then the rest would have been cooked. And I would have went, okay, well, if we're not going to go lower then maybe we're going to seek, you know, this consolidation up here. So I look at this, and that's why I gave you the comments earlier. We may end up going higher for all this. But I can't trust that. I cannot trust that this is the low. It can be. Sure. Absolutely it can be. And I look at NQ and I look at this and I go, yeah, I can't trust that. Especially like here. No, I can't trust that. Now, if you were in here on a super small time frame and you were like, oh yeah, this is going to be a market maker sell model, but we're going to run buy side first, so I want to long on the buy side of the curve. All right, be my fucking guest, but that was not me down in here. Right before lunch, right before, you know, a new low of day. Like, I'm not doing that. I look at this and I'd rather just come back later. Or, matter of fact, just come back tomorrow, personally. So, it hasn't been bad. I just think, as I said, there has not been a trade that I have seen where you could have taken and then held on this entire time. Anyone who's long, it came back. Anyone who is short, it's came back like a little bit more than halfway on the range, right? Versus some shit like in London where, I don't know if that's a mitigation or not, but it's like, oh, 2 imbalances, take the first one, and then you could have just held that bitch all the way to equities. Like, that's what I mean. There has not been a buy and hold all day. There has not been a short and hold all day. There's been neither one of those. So it's a scalping kind of day. And I don't always like trading like that. So, yeah, Felix. Okay, I know I taught you this before. When it comes to shorting up candles or longing down candles, right? These formations can happen anywhere in the range. Okay. But what I like to see, and we really don't have that here. What I like to see is something like this, but on the higher end of the range. Like for example, if this was like Paint or my Photoshop or some shit, and we could screenshot this and we could crop price and say, okay, these up candles followed by lower to get back into it to go down, that I would want to see like up here. It could happen up there, but then when it happens again that second time, oh yeah, that's lovely. But this happened, it's like the middle of the range of the day, right? This low up to this high. This occurs right near 50%. I don't like putting risk on that. Is it small risk? Sure. But just because you can frame a low risk trade doesn't mean it's worth taking. You know what I mean? And then guess what? Just like I said earlier, the same shit would have happened. I'd have waited for a new low of day. It would have been like a couple ticks off and then comes all the way back up. And I would have looked at this and went, there's no fucking way. You know what I mean? I would have been like, dude, that is a bitch, man. So, yeah, but that's it, right? Like ES does make a new low of day, does run, well, it runs it, and then we do get a reversal of equities opening range. But Nasdaq just left it open. That just seems so engineered to me. So, yeah. Every day is not a banger, chat. Okay? Every day is not a fucking banger. At least for me. Maybe there's other people out there who take really good trades. That's fine. But today, no, not so much. Not so much. So, anyway, since there's 70, 80 of you on here now, I guess we can go over at least one announcement. The PDF I did post in the Discord in the general chat. It is pinned. So if you don't see it, you can go to the pinned messages at the top. There's some other pinned messages up there. I don't have a lot of notes here, chat. AM sessions after a holiday generally want to be avoided. That's today. Okay, that's today. We had a 3-day, well, a lot of people look at it like a 3-day weekend, right? Saturday, Sunday, Monday's closed. Anytime we have even if that holiday is on a Friday and then Monday rolls around, that's still a day after a holiday, okay? Because it's the next trading day. Those, I have seen really good trades, but I would say probably 70, 80% of the time, it's generally best to stay out. And I think you can sort of see why. I'm not saying there wasn't opportunities. I'm not saying that. There's candles printing. Whenever you have candles printing, there's opportunity. Okay? And even earlier, I did see this mitigation. I didn't take it, but I did see that. Right? So there was opportunities for longs. There was. I just wasn't willing to long. Okay? And for most traders, I would say the day after a holiday, at least the morning session, typically you probably want to avoid. And that's it for the extended notes. Other than what we've already gone over, how we had such a large regular trading hours gap, right? Because there's going to be, I mean, this is a nice consolidation, I would say. You know what I mean? Like, we consolidated for quite some time on Friday. All right, trying to trade that as an absolute bitch, which is why we don't want to trade that. But anyway, overnight, they're killing it. Their stops are probably going to be here. Which is why, again, I said earlier, we might come back for that. It's just when we are in between a pool of liquidity here, and to me, a pool of liquidity down here too, it's hard for me to trust it enough to put risk on the table to go long. I don't trust it. Can't do it. I look at it, I don't think it's worth the risk. Now, if we get up in here, and we're not going to have time because there's only 20 minutes left in the stream anyway. But let's say we do follow the script from earlier, where we trade higher, we get further into our gap, right? Opening range gap. If we were to get some sort of reversal to go lower, I would trust that more than trying to long within this range to go higher. Does that make sense? And that's really about it. That's really all that I got today. I don't think it's the cleanest day. I'm not saying it's bad. I just don't think it is ideal for holding trades. So, what questions do you guys have? We got 80. Well, it says between 76 and 84, so I don't know what the number is. But there's roughly 80 of you on here. Matter of fact, I'll open the chat. Maybe I've had the chat closed for a couple of days now. We can open it back up. Like Moses parting the sea. We'll open the chat. If you guys have any questions, now is the time. I did like currencies last night. I was going to short Aussie and then I didn't. And then it shit to bed. So that's always nice. The plebs are free. Yeah. Well, I mean, that's the thing. Like, dude, I stream for free. You can watch for free 4 times a week. Now, if the chat is closed to members, yeah, you're not going to be able to ask a question. But I'm feeling generous today. You know what I mean? It's been a good few trading days. So, why not? The inversion on NQ right at the open caught my eye for longs, but I also couldn't trust it. Yeah, when in doubt, stay out, man. The law of safety, I think. Can you tell us more about the options selling that Jordan talks about? Well, I don't know specifically, like, what he's actually doing. I know. So, okay, here's the thing. All right. Option selling either has to be covered by cash, or you have to own 100 shares of whatever it is that you're selling. Okay. So if you wanted to short, let me back up. If you wanted to sell options, let's say on Intel, you would either need the cash to cover 100 shares at that particular strike price, or already have 100 shares for every option contract that you're trying to trade. Honestly, I'm not the best when it comes to teaching options. There's so many people on YouTube that can do it. But the whole idea is you buy shares of a company, right, that you plan on holding for a long time. And by selling options, what you're doing is you're collecting a premium. And most options expire worthless. So most of the time, that premium that you collected, you're going to keep. So easy example. Let's say you want to sell a put option, right, for like down here. And the market goes up. That put option expires worthless. Whatever you sold it for, you keep it. So if it was $100 premium and then it expires worthless, you keep that $100. And then since you own the stock, and it also went higher, you get the gains on the stock too. So you keep this, you keep all your shares, and you keep the premium from that option or option contracts if you traded multiple contracts. So yeah, it's I'll put it to you this way. I told you a long time ago, when it comes to options, rich people trade options. And by rich, I mean like multi-millionaires. You ever heard the term, it takes money to make money? In options, like selling options like that, yeah, it takes money because you have to have 100 shares or the cash to do it, like cash collateral. So most people can't go into Intel and buy 100 shares. Well, actually, we will take a look at it. Let's take a look at McDonald's first. I want to know how she's doing. Slow and steady. Slow and steady, but getting there. Right? So, for example, right now, 100 shares of McDonald's would cost you how much? $31,497. Most people don't have $32,000 to just go buy a stock that they'd like so they can start trading options around it. So then what's the solution? Well, John, I don't have 30,000, but I've got 3,000. Okay. Well, you need to find a cheaper price stock then. So for example, I don't even know where it's at on my list. Oh, there it is. Lost the alphabet for a minute. To buy 100 shares of Intel right now is $2,400. So that's a little bit easier to get into, right? Instead of 31,000, right? 2,400. That's a much lower barrier to entry. Now, even then, I would still say a large number of people still don't have $2,400 to do that either. And that's why, you know, if you don't have that much, I'd rather just stick to calls and puts because you're going to get a lot more bang for your buck, but it's also a lot less probability. So like basically what you could do, right? Say you own 100 shares of Intel, okay? And then you could start selling put options at 23, 22, maybe 21. The further you get, the cheaper it's going to be. So you're not going to collect as big of a premium. It's basically not worth it, right? So once, you know, if the stock does go up, you're going to bank that $3 per share. So at 100 shares, you're going to bank that $300. And if that put option was, I don't know, $75, then you're going to keep that 75 as well. So instead of making 300 on the stock or just 75 on the premium, you're going to make both. So it's not bad, but you got to be right. Because then if you're wrong, you got to buy it at a higher price kind of thing. So if you want to own it and you don't mind, you know, buying it at that strike price, then it's not a big deal. But you could see why it would take a lot of money to make monthly income. Even if it was like, say, $1,000 a month. To sell $1,000 a month of, you know, worth of premiums, you're probably going to have to sell more than one contract of, you know, whatever stock that it is. So you're going to need money. Not 5, 10 grand. You're going to need like, you know, more than that. So anyway, I didn't even see your other questions. What do you mean by regular trading hours? RTH. And let's go back over here. The trim is down there, so it's hard to see, but it's down here on the right of your trading view. There's RTH and ETH. So regular trading hours is going to be 8:30 to 3. I think it's like 3:10. Right? And electronic hours is going to give you all of like Asia, London, all that shit. You get a lot more data. And we look at both. And right, Lucas. It's aligning the time frames. Look, the best trades you're going to take, all right? The best trades you're going to take are going to be in the expansion direction of either the weekly or the daily time frame. The best entries you're going to get are going to be when people are getting stopped out or right after it. So, what do you think the best trades you're going to take are going to be? In the direction of the higher time frame, when everyone else got knocked out on the smaller time frame. Low risk, super high reward, hold during an expansion. Okay. And again, we really don't have that here. But let's just say, for example, this is not a daily time frame, but just pretend that it is. Kind of like with what we did earlier this year with Microsoft and Google and everything else. If this was a daily time frame, right? Market builds liquidity. We trade lower, right? So we took out an old low and we saw expansion, right? So we saw expansion lower, met with expansion higher, and we would zoom in to start looking at these retracements, right? This was like a Monday, like say this was a Friday. It's like, okay, well, Monday and Tuesday, we can start looking for longs to go higher if we are going to swing for the next few months, you know, up here, right? And then going down into that smaller time frame and looking to trade those wicks, right? We want to buy below the open or below the open here, right? Days like this, okay? Again, this is not a daily time frame, just pretend, as an example's sake. If this was a Wednesday, right? Wednesday took out the previous day's low and rebalance like some gap or some shit, imbalance, whatever. So it's like, okay, the next day we can anticipate expansion. We want a long either at the open, below it, or just after it. Or maybe London trades lower and then equities opens higher and we get a dip and then we want to hold that bitch for the expansion. Those are the best trades by a mile, right? Those days where, and I haven't done this in a little while, but those days where you see that I'm entering near the low of the day and then I'm getting out at the high of the day, that's how I do that. I'm capturing a day expansion, which is hard. It is difficult, but those are the best trades. So I don't know how we got here. If a mitigation, reacts on an imbalance without taking liquidity, is it a valid mitigation? Well, if it doesn't make a higher high or a lower low, is an apple and orange? I don't understand. So if it doesn't give you the exact formation, then it's not a mitigation. Harmon, that depends. Because there's, bro, you can buy a call, you can buy a put, you can sell a call, you can sell a put, you can do like iron corridors and all this weird shit that I absolutely do not understand and would not even pretend to understand. Okay. You can do options for speculation. You can do options to hedge, you know, certain things. You know, maybe you have a lot of stock. Maybe there's earnings coming up and you're like, well, shit, man. If this thing flies higher, I'll make a lot of money. But if this thing drops, I'll lose a lot of money. So to hedge that, why don't I just, do some math that is beyond my level of understanding to where they can hedge to where if earnings shits the bed, they can have an option, like a put option that will offset the losses from the stock. So if the stock drops, and let's just say they lost $5,000 in stock, but they made, 4,900 on that options play, then they hedged, their stock, right? So then they could cash the option, and then when the stock goes back up again, they're winning. You know what I mean? Bro, I'm telling you, there's so many things that you can do in the investment world that most people don't know shit about. And to be fair, there's a lot of shit that I don't know about either. But this world is diverse, bro. From the very beginning of when I became a mentor, I told you that. I said some of you might become a bond trader. You might not even like bonds. You might not even know what a fucking bond is. But you might become a bond trader. Jordan really likes options. He likes selling options. Same way Patrick does too. It's income. You're collecting that premium up front. Right? So it's income. Now, again, there's going to be instances where when you get it wrong, you're going to have to buy that stock at a price you didn't want. But if it's stock you want anyway, because you're going to, in the back of your mind, you're going to hold it for 6 months, a year, or indefinitely, and that's not a big, deal for you, then there's nothing wrong with that. Any thoughts on silver? Boy, do I have thoughts on silver. Absolutely. Silver's fucking flying. I love it. Nothing's new, Adam. Nothing's new. Same shit every day, my friend. I did get some new t-shirts in. I'm wearing a brand new t-shirt. That's exciting, isn't it? Yeah, brand new black shirt. I don't see anything wrong with that, Lucas. I don't see anything wrong with that at all. There's nothing wrong with having multiple accounts. Always been open about that too. If anything, I encourage it. When, let's say, for example, let's just say for some reason, stocks fell like 5% today. You think my futures account would give a fuck? If there's no open positions, my balance stays the same. You think I care? No. I would never want to take too big of a hit in one. You never want to put our eggs in one basket, broski. Adam, that is going to depend on what country you live in. They make you fill out all this tax shit, which is like the worst part of getting an account. And like, dude, even my people, dude, I had a meeting on Friday and I didn't even go. I fucked up. But yeah, my tax guy, he had some questions. He had some questions. And I was like, okay, yeah, I'll come in and we'll figure this out. But I let CPAs and people who know accounting and all that shit that I hate. I hate paperwork. I hate accounting and taxes and all this shit. Just let somebody else deal with that shit and hope they don't fuck me over. So, Adam, I'm not a CPA, not a licensed financial advisor, nothing like that. So my advice to you is seek a professional. Okay? That's what I think. Anyway, I think that'll be the last question for today, which is a good question to end on. But this is just too muddy for me. Too muddy for me. I still think this is going to trade higher to take out shorts. It is possible we could still trade lower today, but given what we've had so many, not moves, but look at the range that we've had today. for NQ, right? Overnight, big ass range. And then today from equities, I mean, we dipped a little bit, sure, but then we rallied, 180. We traded lower like 220. Then we rallied another 170. Like, how much more juice could we really squeeze out of this? So I'm going to go squeeze some oranges. I bought a cast iron juicer, and I have a bunch of oranges, and I make orange juice, and it's so delicious. I'm telling you, you get a cast iron juicer, you get some oranges or even like the organic shit, and you get some glass jars, squeeze that shit, you let it sit in the fridge overnight, and you wake up in the morning and you drink that shit. Oh man, I'm telling you, man, it's right on par with Natalie's. For real. It is right on par with Natalie's. But it doesn't cost $9 fucking a thing. You get a little bit more when you buy your own fruit. But Natalie's, oh man. $9 a bottle. Do you know how much I would spend a month on that? Ugh. 1 or 2 of those a day? Oof. Fuck. I got Saratoga too. So I don't even want to look at how much I spend on all that shit. So y'all be good, be blessed. We'll be here same time, same place on Wednesday the 3rd for another free live stream. All right. Don't forget to check the Discord, the pinned messages, right? There's PDFs, there's images, there's even links to some of the indicators over here, right? So do what you got to do. I'll see you tomorrow.
You've been holding on too long. Tonight is not the face, even though this is hand on hand.